In the past few days, we've been talking a lot about Amazon's new product, the Kindle Fire, what this means for Apple and its dominance of the tablet market, especially with the iPad, and what it means for Barnes & Noble, the Nook. There's actually going to be a new release of the Nook coming out soon as well. So John Erlichman still here with Erik and I in the newsroom. And we want to bring in somebody else here on these tablet wars because Robert Hagstrom is joining us right now from Philadelphia. He's a fund manager at Legg Mason Funds, and Amazon is one of his top holdings. Robert, thanks for joining us this morning. This move, basically what Bezos is doing, highlights these battle lines blurring, right, between retail, media, and tech. But what if Amazon loses money on the hardware? Do you think that Jeff Bezos cares at all about that, or it doesn't matter that this is all about services?
Yeah, I think Jeff would not want to lose money on anything, but I think the whole idea about the new tablet is that it's connecting customers to the store. So if it's a break-even product for them, they're going to make a lot of money on the sales that will occur between the customer and the Amazon store.
Robert, it's John Erlichman. What part of the Amazon business are you most focused on? For example, we talked about, Deirdre just mentioned, Barnes & Noble. This arguably helps Amazon sell more e-books than Barnes & Noble, and that's why Barnes shares are under so much pressure tomorrow. Go ahead.
Yeah, John, when I think about Amazon, we've owned Amazon for now 10 years. It's our longest stock that we've had in our portfolio. I kind of smile when I think about 2001. It was a little $3 billion business. Today, it's a $100 billion business. Amazon is basically the world's largest direct distributor of retail products across everything. We're not about books and movies and things of that nature. It is everything, hard goods up and down the line, and we're doing it internationally. So when I think about Amazon, it's way past worrying about Barnes & Noble and worrying about just movies and books. This is a global store.
And it is a great point, Deirdre, because if you think about where Amazon gets most of its money right now, especially in traditional book sales versus ebooks, they're selling more ebooks than traditional books, right? That's how the business has changed, and that's why these devices are so important.
Robert, what about this idea, speaking of books, speaking of music, I mean, a lot of the money flows back to the content makers, right? I mean, Apple has even said in the past for iTunes that it does just a little bit better than break even. What does that mean for Amazon?
Well, it's a low margin business, no doubt about it. But I think, where people run into mistakes with Amazon is in how they describe it. Amazon's very much like the Odell model, which is it's a low margin, high turn, low capital intensive business. And you can make a lot of money. Ask Dell. Dell went up 10,000% in the decade of the 1990s as a direct distributor of PC products. That's what Amazon is. It's a direct distributor of retail products, of everything from, shoes and clothes and books and electronics. So it's a low margin business, but it's low capital intensive and has a lot of turns. You can make a lot of money in that business.
Robert, you bring up an excellent point. Amazon is a low margin business, and many people may not realize it. I was kind of wondering to myself whether the Kindle Fire is going to help Amazon, so to speak, make some real money in terms of profitability. I was looking at some of the numbers this morning, and I think we have them for everybody. Amazon's operating margin is just 2%. It's razor thin. And some of the other companies that do online products and services, namely Netflix and Priceline, have operating margins of 15% and 29% respectively. And Apple, which, in theory, right, products and services are supposed to be high margin because you have that low cost base. Apple has a high cost base and an operating margin of 33%, tops among that list. So is that operating margin that Amazon has going to swell, going to expand with a product like the Kindle Fire?
Well, it could, and depending upon the mix of what's being sold through the Amazon stores. The hard goods type stuff will have lower margins than the digital. You can do reasonably well on the digital side, but I look at it slightly different, John. I would kind of look at the low margin business at Amazon would be a very difficult thing for anybody to disrupt. If you want to disrupt a business, you go after the higher margin competitors, and then you basically want to sell a lower priced item or something cheaper. So it's the high margin companies, I think, in this digital world that are at most risk. Amazon, be very difficult for anybody to disrupt Amazon. I think that's how good the company is.
That's how good the company is. But to Erik's point on some of the fundamentals, I mean, Apple has $76 billion in cash. So that's basically 12 times what Amazon has. Do you think this is a fair fight? I mean, I know you think it's more than fair, but from the point of view of an Apple investor, you can understand the questions about Amazon's potential success.
Sure. I mean, Apple's been a great investment. We actually own it in our fund as well. We've owned Apple, I guess now about 4 years. We bought it through the 3-4 years through the 2008 crisis. We've owned Amazon longer. Both of them are outstanding companies, but both of them, I think, are going down the road slightly different. You've got to remember, Amazon is a retail business that does it across the gambit. Apple's not doing that, at least not yet. The other thing you have to remember about Amazon, where I think it has a leg up on Apple, is that it's the #1 cloud provider out there. A lot of people don't know that Amazon, through its AWS business, is one of the world's largest provider of cloud services. This is where Apple wants to go next, but Amazon is already there. So, you've got two great companies here, but as I said, I have to smile when I think back 10 years ago, this little bitty business, a lot of people didn't know it was going to survive, and today it's a stalwart. This is a great business.
Well, you've done well with your pick, Robert. We thank you for joining us. Robert Hagstrom joining us there from Legg Mason Funds in Philadelphia.